Hello, everyone. Welcome to the International Grain Forum. It is our huge pleasure to present today Turkey and Egypt grain outlook, two key markets shaping the Black Sea and global grain trades. So we do have huge pleasure to have excellent, outstanding expert with us today, Mr. Hesham Soliman from Mediterranean trading company, and Mr. Izzet Aliev from BA Ticaret, and we will enjoy today their excellent expertise. So if you have any question, please put in the comment and join the discussion. So without further ado, I would like to ask Mr. Hesham, could you please present the Egypt grain market outlook? And thank you very much.
Okay, thank you. Good morning, everyone. My name is Hesham Soliman. I'm the president of Mediterranean Star Company for trading. We are dealing in grains, wheat, corn, soya, crude oil, and we do some trading consultation, and also we are doing some agency. I have been in the Egyptian market since 25 years right now. We will go deeply this morning in the Egyptian market to analyze what's the number. And for your information, as we all know that the MENA region is importing 60 million tons of grain yearly. Egypt has a share of 47% of it because Egypt is importing around 28 million tons of grains. So Egypt, one of the biggest importing country, and we have our reasons why we are becoming bigger and bigger and bigger, because populations in Egypt now is 112 million one living in the country, without the refugees as well as the tourists. We have 15 million tourists as well as around 10 to 11 million refugees. Next step, please. We will start. First thing is with wheat. Wheat is a very important commodity to Egypt, and we all know that 1 year ago that President Sisi decided to replace the GASC with Mustaqbal Masr agency. So the wheat market in Egypt is divided between government and private sector. Normally, before 5-6 years ago, this market was split between the government sector and the private sector. Percentages between 50-50, 48-52. But since the movement of GASC, the government percentage went down. It reached 30%, and the private sector was 70%. And it's the first time that the private sector share is becoming bigger than this. So let's deep in the wheat market and see what's going on in Egypt. What is the prices? What is the trend? What is the historical data? So Vlado, next, please. Next slide. This is the historical data for the importing quantities of wheat in last 8 years. We will see here how big is this market. If we exclude 2023, it was a dramatic year. Everyone is remembering it because Egypt faced a hell of problem with the currency. So it was in 22 and 23. And numbers are saying the truth. We see that the market is growing and growing and growing. Because of the increase of population, because of increase of the tourist visitors. The only problem is that the Egyptian market is a price-oriented market. It is not looking for a quality. I'm talking about 5 to 10% out of the all imports was a high quality of wheat for some special needs. So these are the numbers which proves that the big quantity of wheat is coming to Egypt. Last year it was 14.7 almost million ton, and this was one of the biggest numbers that Egypt imported in 1 year, and I will explain in the coming few minutes why it was big. Next slide, please. This one to see the analysis of 2024. Why are we focusing on 2024? Because it's the year coming after the situation was dramatic in Egyptian banks and the foreign currency problems that Egypt faced. So we imported in this year 14.7 million tons of wheat. And as I mentioned before, that the wheat market is a competition between the Egyptian government and the private sector. With this year, the share of private sector was 55% out of the imports, and the government was 45%. So next slide, please. And now we will have a look what happened in the first quarter till the third quarter of 2025. We will notice that the numbers went down. Why it went down? For many reasons. Let's take it one by one to analyze this situation. The Egyptian government was allowing in 2024 the export of wheat flour and pasta. But in last May in 2025, they issued a decree to any company in Egypt wanted to export wheat flour or pasta. They have to get a SWIFT from the buyer with 100% pre-advance to open to him the custom certificate to allow him to export. So from my point of view, it's banning for export. They put a complications. Who is paying 100% upfront to buy wheat flour? We have our neighbor Turkey. They are very good competitors in prices. So why should I pay you in 100% while I can get a shipment on cash against document from other country? So last year we export 1.75 million tons of wheat flour. We used 2 million tons of the 14.7 for the export activities of the wheat flour. So in this year, no export of wheat flour coming out of Egypt. So the numbers decrease with the 2 million we used in export of wheat. So this is the reason why the quantity went down. If we look to the numbers here, we found out that Russia and Ukraine, the Black Sea origin is dominating the market in Egypt. We're talking about the share of Russia, 55% of the imports, and Ukraine is 32%. But in 2024, Russia was 74%. So the imports from Russia went down from 74% to 55%. But in Ukraine, last year it was 13%. It jumped this year to 32%. I'm talking about till the end of September. But what happened till the mid of October in the Egyptian market? We reached with our import in these 50 days between September and October to 10.1 ton of wheat. So a big quantity is still coming to the country, but a lot of problems started to be showing up in the market, which pushed the prices to go down. For example, right now, the local wheat prices in Egypt is behind the international market between $6 to $8 per ton. For example, if we're talking about the Ukrainian wheat, 11.5, we're talking about 244 in the local market, and the replacement is 251, 250 minimum, okay? And we're talking about the Russian 11.5, we're talking about 245 in the local market, while its minimum price, you can get it between 251 and 253. As well as the Russian wheat 12.5, it's in the local market in Egypt today, 248, while replacement minimum is 255. So this is one of the reasons why the market in Egypt is slow in demand right now, because anyone is going to import cargo, he will achieve losses. This is number one. Number two, we have a problem in the country. We have 9 vessels arrived to the Egyptian ports since last month, it was coming to Mustaqbal Masr agency, but not in a direct deal. Mustaqbal Masr agency was buying these 9 vessels from a trader who I don't prefer to say his company name. It's this company failed to pay the shipper for these 9 vessels. So they have been waiting in the board since 20th of, since 1 month almost, with a few days. Now these cargoes started to be offered to the Egyptian importers with a low prices, because now we have damages, what we cannot guarantee to get paid. Everything is fake for the shipper. So he is ready to sell at any price, but to get out of this situation, which is putting more pressure on the prices in Egypt in the local market. This is an issue, and the other issue is the government, the Ukrainian government, started to move and chasing her cargo. That the Russian is, that there is a war between Russia and Ukraine, and nobody can judge this cargo belong who. You are buying cargo, but in August, the embassy of Ukraine in Egypt sent an official letter to the government of Egypt, mentioned IOM certificate list for some vessels going out from Ukraine. It's Ukrainian cargo, but they come to Egypt with a certificate of origin with a Russian certificate of origin. So I don't think that the government in Egypt take it seriously. But in the 8th of October, the second letter come from the Ukrainian vessel was mentioning the vessel's name as well as the importer's company name. So then we have a case right now. So the Central Bank of Egypt, once he received the complaint through the Ministry of Finance, he suspended these companies and open an investigation to see what's wrong in this and who is paying companies, including in the sanctions list. So we are facing a little bit big problems in the Egyptian market for wheat right now. Nobody knows where it will be end, but I guess within a couple of weeks everything will be back to normal. We'll see what will happen. But I expect that a low quantity will be demanded for first half of November. And I expect that the market by end of December 2025 will be imported about 12.5, 12.7 million tons of wheat. Okay, next slide, please. Second commodity we are talking about is corn. Corn in Egypt is 100% by the private sector. There is no government interfere in this commodity. It's all the numbers we are going to see right now. It's by the private sector. Okay, it's a market more far away of the decisions of government, because the government considers the wheat is the high food security for Egypt because of the subsidized spread they are giving to poor people, a lot of complicating systems. So they would like to leave the wheat in the hand of the government. Next slide, please. This is the historical data for last 8 years for the corn imports. But before we go to the numbers, we have to explain that Egypt normally consume about 16 to 18 million tons of corn yearly. We are producing in Egypt 6.7 million tons of a local corn, and we cover the shortage from outside by importing. These are the numbers we were going down to see. It's between, as I mentioned, 9 to 10 million tons yearly. Or as I mentioned before, 22, 23 was a dramatic years, because if you see here in corn, because it's for the private sector, it went down to 6 million tons, because that the foreign currency problems that banks were not able to pay the documents. It was a dramatic year for all importers. We all suffer, and most of our audience, if they are exporting to Egypt, they remember these hard days. Okay, let's see who was supplying Egypt this corn. Next slide, please. This is the import analysis in 2024. We will see that Brazil has 55% out of the imports. So South America was dominating the market, and Ukraine was a 35% share in these imports, while Argentina was a 9% of the imports. Okay, next slide, please. What happened in 2025? From the first quarter to the third quarter, these are the numbers. We will notice that Brazil went down slightly from 52% sharing to 55 to 52%. But Argentina, it goes up from 9% to 23% a share of the market. Ukraine, it went down dramatically. It was 35, went down to 13. Because of what? Because that the prices in Ukraine is not competitive at all these days to the importers. So we are counting on Brazil and Argentina in 2025. And for example, the prices also facing the same problem in like wheat. We are behind the international market. The Brazilian corn are offering in the market today at 233, while it's offering 241 as a replacement. So I don't think that, although that a lot of vessels come from Brazil for months like September, 69% of our import of quantity on corn in September was coming out from Brazil. A big numbers of vessels arrived to the country, and still a big number of vessels are loading in Brazil coming to Egypt. So this put a pressure on prices, a lot of supply, and the demand is not good. And also one important issue we have to know all that the poultry business in Egypt is the one who is dominating the market of corn. If the poultry activities is high, you will find the importing quantities going up. If the opposite, numbers are going down. The numbers we expect for the poultry business to go down in next months and the months from December and November and January 2026. This will be the lowest poultry because of the Egypt is becoming cold in these days. So the breeders are slowing down and reduce the numbers that they are producing. So, for example, right now, if we look what happened to the mid of October, between 30th of September and mid-October, we will find out that the import jump in these 15 days to 8.3 million tons. Okay, I'm expecting it will end up by end of December between 9 to 10 million tons of corn for the Egyptian market. Next, please. And the third one is the soybean. Soybean is a special case for Egypt. Why? Because only 5% of the local production is covering the needs we need from soybeans. Only 5%. So we are importing 95% of our needs from soybeans. It's a big number. And in the last 4 or 5 years, the crushers numbers in Egypt have been increased. So the imports number from soybean started to go up. And this is what we will see in the next slide. As you are seeing, historical data for last 8 years, we started here with 1.9 million. It ended here with 3.4 million. Okay, exclude the years of 2023 because the same reason of the foreign currency. And the soybean market in Egypt is completely 100% for the private sector. No interfere from the government except for the crude oil that the Mustaqbal Masr are importing. And there is a correlation between the quantities of soybeans and the numbers of tons that Egypt import of the crude oil. Because as we all know that the Mustaqbal Masr didn't even complete 1 year, but they are trying and they are importing crude oil, but was not the same quantity that GASCO was doing. We are comparing an institution with 40 years experience, which is GASC, with a 1 year experience was Mustaqbal Masr. So they will get it on later on, but the number of crude oils is a little bit less than last year. So the numbers of soya started to go up. Next slide, please. This is the imports in 2024. The analysis, we will see that USA is dominating the market. It's a huge quantity. In 2024, they shipped 57% of our needs was coming from USA. And 20% coming from Brazil and 18% coming from Ukraine. Ukraine is a big player also in the soybean market in Egypt. The analysis of this number, if we're talking about soya coming from Ukraine share before the war, it was 30% of the market. But now, because of what's going on, as I mentioned, the geopolitical problems, everything is not stable even in the Black Sea. Next slide, please. This is the analysis of what we import from Q1 to Q3. We imported 3.4 million tons, which is, I think, it will be more than imports will jump to big numbers than 2024. Because of what we were here, 3.4 million tons of soybean by end of December. Now we are 3.3 million ton till mid of October. So my expectation that soya will end up with more than 4 million ton, 4.25 million tons of soya to be imported to Egypt. And the gap for the soya between the replacement cost and the local market is only around $5. It's not like the other commodities. Still, we are behind the international market with $5 because of what last month we have a lot of Panamax vessels coming from USA to the country, and now we are talking about percentages of 78% coming from United States for supplying Egypt for 2025, and Brazil was 3%. Ukraine went down from 18 to 14%. So let's say USA is dominating the soya market in Egypt, and we have a lot of Panamax vessels that arrived last month coming from the States. They were offering the same price that Ukrainian was offering, with a little bit. Ukraine was expensive, was $1 or $2, but this is not the problem. The problem is the quality. The USA quality is much better for the factories here in Egypt. The second issue is, as I mentioned, is the crude oil quantities, which put more pressure on the soya bean imports to be increased to cover the gap in the crude oil. The market is dry for the oil right now in Egypt. Next slide, please. if we're talking about why is the Egyptian market will keep going up and up, first of all, we have almost 2% increase in population yearly. Number two, the tourism number is becoming bigger and bigger every year. And we have refugees, although that some of them was returned back to their country, like Sudanese and Syrian, but we still have 11 million refugees in the country. They need to be fed. As I mentioned, that we are importing 28 million tons. We have a lot of silos Egypt government has to build to guarantee the smooth of vessel arrival and discharge. Otherwise, we will see a long lineup for vessel waitings. I hope I was covering all the points, and I will be happy if I received any questions. I will answer it. Thank you for your attendance. Thank you, Vlado.
Thank you, Hesham. It was just an excellent presentation, very valuable insight, and really thanks for your all efforts. So we do have few questions. So first, will there be a recording available? Yes, it will. The recording will stay at LinkedIn, so you can just share, download it, and it will be here. Second, will you share the slides with the participants? If it is okay with you.
Yeah, it's okay. It's okay.
Okay, we may just easy. We may put a link to the slide in the comment, and just click on the link, and you will access the presentation. And we do have third question, and I believe you already tackled this. We have heard that between 8 and 10 vessels were stuck at the discharge ports due to delay in payment. So I believe you. You already tackled that. Okay. Thank you very much. So if you have some other question with with Egypt market, please you may put in the comment as well. And would you please give us the outlook of the Turkey market? Many thanks.
Good afternoon, everybody. Can you hear me well? Good morning.
Yes. Good morning. We are hearing you.
Yes, great. While awaiting my presentation to upload, I would like to give you a few headlights about myself and about my company. I'm the managing director of Ticaret, or Ticaret, which stands for Trade of Bulk Agris. So I'm the managing director, and I have been in the industry for over 15 years, I suppose. And I would like to share my insights about the Turkish market for those who are not very familiar, but who would like to have an understanding of the Turkish market. So Turkey is a very lucrative country for exporters of grains, and this is thanks to the big population in the country. We are the second biggest nation after Russia in Europe. The population growth is around 2.4% per annum. The Turkish economy is described as an upper middle income country with a per capita GDP of $15,400. It's the 17th largest economy. The projected annual growth for the year ahead is 3.7%, while for this year it's 3.2%, and that's thanks to the disinflationary measures introduced by the Turkish Central Bank. So inflation is a very important phenomenon in the grain industry here, and that's thanks to the 33% inflation per annum, which is like a decrease from 49% last year. So we are not only facing challenges in the industry, competition in the industry, but we are severely fighting the inflation as well. The number one reason the industry here is facing is the declining trend in the grain production. That's predominantly thanks to the global warming here. We feel it. According to the agricultural ministry, these numbers are like 1.6 to 4 degrees a year, which causes a yield decrease for major Turkish grains, namely wheat and barley. So when you look at these numbers, these are crazy numbers. Consider it's like 21 million tons of wheat produced in 2023, while it's 17 million tons this year. This implies a serious decline. On the other hand, the corn is also a phenomenon. It's also increasing in the production. I will come to this later on. You may ask, how come you are facing global warming, but in the meantime increasing corn production? I will come to this later on. But I would like to tell you about briefly about the Turkish grain industry. I mean the industrial players. What I mean here is the Turkish grain industry is heavily shaped by the imports and value-added exports. This means Turkey had a long-term vision in the past for being a food hub in the region, meaning Turkey would import raw materials, food raw materials, let's say corn, wheat, and export them in the form of starch, wheat flour to the neighboring countries and to the rest of the world. So this illustrates that we have a slightly enough domestic consumption matching our production figures. So in this respect, we can say Turkey is slightly a self-sufficient grain economy. However, as I was saying, we are mainly importing also for the export needs of the grain industry. Looking at the imports, you may see the wheat and corn imports are seasonally shifting from 12 million tons for wheat to 2 million tons in 2024, and this is mainly to the restrictions in the industry. Turkey is among the top 3 importers of milling wheat globally, but in the meantime, top 2 wheat flour exporter in the world. And we are competing with Kazakh flour mills in this respect, considering Kazakhstan is exporting mainly to their surrounding neighbors. Turkey is doing a great job in this respect, capitalizing on their logistics infrastructure, as well as, the vigilance of the Turkish grain exporters. So these numbers explain a crazy import demand, but I'm here to stop all the participants from loading trucks and shipping them imminently to Turkey. Seeing these prices, we are currently seeing the milling wheat prices at $345. So I don't want any participant in this presentation to ship their trucks and send them immediately to Turkey, seeing there is a huge demand and huge markup. No, that's not the case. Please look at the import duty that will stop you at the border. This stop means it's literally impossible to import anything with this import duty. We have barley, also crazy numbers, around $281. Durum wheat, it's par with the milling wheat, and this also has an implication as follows. Looking back at wheat production in Turkey, you see 17 million, 18 million in average for the Turkish wheat. Wheat comprised of two elements, namely milling wheat and durum wheat. Turkey is a traditional producer of durum wheat. We produce around 3 to 4 million tons every year, and the rest is milling wheat. So looking at these numbers, I can tell you that the share of the durum wheat remains relatively stable. However, the milling wheat production is going down. This year's forecasts are a bit high, which suggests that durum wheat ratio remains the same, but milling wheat is falling down. You may see at this presentation two columns. This is mainly the USDA figure, and this is our figures we are using. So there is no redundant season for this year. I hope it will not be anyway. These are the figures we are working on. We are seeing relatively lower production numbers ourselves. This is not for getting a challenge here, but we expect some pessimistic numbers. Let's keep in mind that USDA and other statistics institutions suggest numbers with a gradual decrease. But these are, I mean, we are not in the position to, lower our estimates on a weekly or monthly basis. So these are like going to be the numbers we are going to use throughout the season. So this is the reason why you have we see more pessimistic numbers than what we see in the eyes from the USDA or Turkish Statistical Institute. So here the TMO wanted, as you see here, durum wheat acreages to go down, and that will be the case, I think, starting from this year, because we see durum wheat crops are getting higher, and the production of durum wheat is mainly stored in the warehouses of TMO. Let me introduce you our main player in the industry. This is the TMO, Turkish Grains Board. Turkish Grains Board play a very important role in the grain industry. They are not only regulating the markets, but they are also introducing incentives to the industry for the next crop seasons. So you may be wondering why we have such a huge milling wheat intervention price. This is mainly from the motivation that TMO wants the farmers to remain in the rural areas and keep sowing milling wheat or other grains. So this is why we are kind of having such high prices. So the next question that may arise is, how come Turkey imports such huge quantities and still maintains to keep the import duties? That's again thanks to the notion of import license. So the import license is actually a factor of exports, which is like the Turkish flour exporters, as an example, are using the domestic wheat to process their production and export the end product, wheat flour. Consider in this case, they are buying the milling wheat at 13,500 lira, which makes it impossible to be competitive in the global supply chain. Instead, the Turkish industrial practices enable the flour mills to buy the milling wheat in global markets on CFR or CIF basis. Let's say today's prices are $250 for 12 and a half. We don't know how this agreement from yesterday will reflect into our market later today. But basis Friday's prices, it's $250. The Turkish flour mills can buy the globally available milling wheat at $250, process them, and sell the wheat flour, and thus have an import license in hand. And this enables them to avoid the import duty in this respect. I hope this scheme was clear. Sometimes it is not really understandable for various industry players, but for any questions, I'm here to answer them later on. For the corn, let's say, the same principle applies to the poultry or egg manufacturers. The egg manufacturers using corn as their main ingredient also benefit from the same scheme, meaning they process corn along with other proteins and export eggs. In return, they obtain an import license, which they later on may use to import duty corn. So the important challenges in the industry, I would like to discuss them as the following. Remember the first slide I showed you? We are battling a food inflation, and the implication of this food inflation is that the TMO has the role, the mission to balance the prices of the ingredients. So by definition, TMO needs to regulate the prices in the domestic market to avoid a food inflation. And to regulate the market, TMO mainly imports milling wheat, barley, crude sunflower oil. This year, TMO started their import race with barley. Some industry participants suggest that they may import up to 1.5 million tons of barley for the 25-26 season, which we think it's not very rational. Our idea is that TMO will import around 750,000 tons of barley. Otherwise, this would completely change the production scheme in the entire Black Sea region. I mean, next year you may see many farmers, or the year after, let's assume the sowings are complete in the Black Sea region. For the 26-27 season, we don't want all the farmers abandoning wheat at the expense of barley. So we expect that 750,000 tons of imported barley will be sufficient for TMO to regulate the markets, and they will substitute the balance with corn. The crude sunflower oil, thanks to the shortage in the Black Sea basin this year, is an important issue. We are traditionally a consumer of sunflower oil. Unfortunately, we do not have other oil varieties in the shelves. We have either sunflower oil or olive oil. We don't have rapeseed oil. We don't have soybean oil in the shelves. The shortage, we are now fighting. We are now seeing 1,350 CIF levels for sunflower oil. These are, record levels. We expect TMO will be continuing to import the crude sunflower oil for the coming months ahead. The next question is the milling wheat. The milling wheat is also rather a market changer when TMO comes into the game. That's mainly TMO buys in 600 or 700,000 ton batches, but we don't know when or how they will start importing this year yet. So far, we have been told by the TMO officials that the milling wheat stocks are sufficient. However, they may consider to import looking at the crop development in this very season. And we can tell from the weather outlook, the sowing months, during the sowing months, we have received sufficient moisture. This would enable our farmers to sow wheat on a timely basis. So time being, we do not see a challenge for the TMO. However, considering the supply chains, I mean the difficulties in our traditional supply chains, we expect TMO to step up for imports this year. I would like to go back to the wheat imports of Turkey for the last 4 seasons. You may see here a drastic fall in wheat imports in Turkey. That was mainly due to the restriction of import of milling wheat from abroad. This was eliminated as of March 19, 2025. So the imports will be picking up in the season ahead. We do not expect this to reach 8 million tons, or let's say 11 million tons, as the case was in 2022, 2023. However, we expect the wheat imports to remain at significant volumes. The TMO is right now holding the most of the stocks of grains in their warehouses. They made huge purchases, and this is mainly because of the cost of finance. Remember, at the very beginning, we have a 39% cost of finance, which makes it really difficult for all participants to keep any stocks. And that also reflects itself in exports, considering Hesham may better tell this than myself. We are seeing now blockages in the Red Sea thanks to the Houthis. We don't know how this will really continue throughout the remainder of the season, but should that be the case, we expect wheat flour exports to fall around 20 to 25% versus last year. Again, this is mainly thanks to the cost of finance, because you have to finance your exports throughout the entire chain until 3 days prior to arrival at destination, and this is a serious cost, serious burden for the exporters of the Turkish industry. And this, this also shows itself greatly in working capital challenges. It's rather a structural problem, not a problem confined in the grain industry itself. We see it also in other exporting sectors as well, and unavoidably in wheat flour exports. We should also mention that the supply chains are also shifting, as we see. Russia has been a traditional supplier to Turkey thanks to the proximity to their shallow seaports. Consider that Egypt is like buying Handys or Panamaxes, right, of wheat, while we are able to source 3,000 or 5,000 tons of coasters from Russian shallow seaports, which really makes things easier for our processors in terms of working capital and cost of finance. However, we see now Russia is also increasing their exports, or let's say their ventures are being shaped accordingly. We see a lot of flour mills being constructed nationwide in Russia. they want to ship mainly to Afghanistan or former Soviet Union republics, but they also sell to other destinations. So this changing supply chain also decreases their share in Turkish imports, and also the import numbers. Barley is also a very important factor in the scheme. Russia is a big exporter of barley, probably number one in the world. But for the last 3 years, we see their exports falling, and this is mainly thanks to the increasing production capacity inside Russia. Now they are a net exporter of meat from their ports, and this also changes the supply chain and also creates challenges for Turkey for the exporting segments. Now, I would like to tell about the origins. I do not want to give a lot of detail, but we can say 90% of milling wheat imports are realized from Russia. This has been traditionally the case for the last 15 years. Ukraine is growing in numbers. All the participants here will remember that Ukraine was a major exporter for corn to Turkey in the 24-25 season. And that was thanks to the great shortage in corn production, but also a shift in consumption. To elaborate, we see a great deal of increase in poultry consumption in the Turkish diets. So to say again, we are seeing a decrease in meat consumption, but we see an increased consumption of poultry meat. This is a change in our diet, and this helps Ukraine to export their corn to us. We don't know how this will remain, whether we are going to eat more poultry instead of red meat. But we can say that for a foreseeable future, Turkey will be consuming more animal proteins in the form of poultry and eggs. EU was an on and off player for Turkish wheat imports. Romania has been a good number three of corn export into Turkey. But in the past, we have seen Baltic countries, namely Lithuania and Latvia, exporting heavily to Turkey. We don't know how this will continue to be, considering the trade wars, all over the world, but also high prices in the Russian inland. Right now, we see a very narrow gap between Baltic origins and Russian origins. Why not? Given a favorable freight, Baltics resume their wheat exports to Turkey. That has been the case. Turkish millers are very well familiar with Baltic origins. They know how to process Baltic origins. So for the remainder of the season, we expect Baltics to improve their share, maybe not as high as the case was last year, in the previous years, but we see them picking up, at least preparing whether or not Turkey will enable their imports. Another factor here challenging the grain exports is Egypt is Egypt is increasing their flour exports, and our flour mills are a bit surprised by that. Actually, they shouldn't be, because that's thanks to the truck traffic in the neighboring countries and increasing freights, container freights. Egypt has been heavily benefiting from this, mainly to Somalia. Is that right? Not really right. Okay. Okay. Maybe you can elaborate that. But
Yeah.
just to inform you, our flour exporters have been complaining about that.
Actually, as I mentioned, the government in Egypt stopped the export from Egypt for wheat flour. So the whole market is under your hand right now. Egypt is out of competition. We only shipped wheat flour for Gaza. That's it.
Okay.
I mean, it's
Okay. Right. But in any case, apart from Somalia, we see Iraq increasing their production in wheat flour, and this is at the expense of Turkish flour. The Turkish flour exporters are still able to challenge the local Iraqi prices. However, the exports are not enabled because of the high export duty at the border. Iraq is traditionally number one export destination for Turkish wheat flour. Unfortunately, we are facing around 100% to 120% of import barriers. I don't want to name this mainly an import duty, but we are facing import barriers disabling flour exports into Iraq. We expect Syria to be the next big destination for Turkish flour imports. They will also shift some of this flour imports to Baghdad through highway and overcome the trade barrier in the northern Iraq. So there are challenges, but also opportunities in the same time. And as I always say, in our grain markets, we are always happy. We are always motivated, because there's always a challenge that keeps us motivated. Thank you for your time. Thank you for listening to me, and I'm here to answer questions, if any.
Okay, thank you, Izzet. We do have a lot of questions today. Okay, first question, Izzet, for you. Did you evaluate the impact of refugees in the terms of demand increase?
Vlado, please repeat.
Did you evaluate the impact of refugees in terms of demand increase because of the large number of the refugees in Turkey? Is there any demand increase?
Yes. That's actually a major driver in the season, in the previous seasons. Apologies, in the previous season. But when I just browsed through the data, right now the immigrant status is now minus 285,000. So we have less population. Some immigrants left for Syria, returned home. And this is also partially compensated with the tourism. We have a declining share of tourism in the consumption. So having said that, the immigration played a major role in the previous years, but now it has reached a certain level of saturation.
Okay, perfect. Thank you. You do have a lot of questions, but we will try to answer in the comment. Hesham and Izzet will be kind enough, I'm sure, to answer all the questions. And
sure.
Just thank you, Hesham and Izzet. Many thanks for just excellent expertise. It is valuable for all of us. And I would like to thank all the participants for being today with us, and see you all the guys next week, same time. Thank you very much once again, and have a nice day.
Bye. You too.
Thank you.
Thank you.